Today is Tuesday, April 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains this morning, Mark, any major surprises from last week's USDA data?
No, not really. And I think that's very possibly the biggest surprise of all, in that a report with this much data, there were no big shocks. Corn acres at just over 90 million were at the low end of expectations, down a million from the USDA February Outlook Conference. Bean acres at 86.5 million acres were in line with expectations, but also down a million from the USDA Outlook. Spring wheat acres and durum acres, I think, were possibly the biggest outliers. They're both slightly above the range of estimates. Total acres to principal crops here in the U.S. are forecast to be down 2% to 313 million acres. So I think farmers are apparently responding to the lower price environment. However, this is actually well within the range of what we've seen here over the last 4 crop cycles. On the stock side, wheat inventories as of March 1st were a bit above the range of estimates, likely suggesting weaker than expected domestic usage. Corn stocks were a bit below expectations, an indication of stronger usage, or the fact that perhaps last year's crop was a little bit larger than projected in January. And bean stocks were very much in line with expectations and right at our pre-report estimate at 1.845 billion bushels.
Mark, with these latest USDA reports behind us, what do you think will drive prices in the ag space this week?
Yeah, so far many contracts continue to consolidate within last Thursday's ranges, the exception being Kansas City, Minneapolis wheat and meal, both just slightly below that now, and oil prices have now started to surge a little bit. Yesterday, we had some usage data out, and that did show corn consumption for ethanol production was strong as expected. Soybean crush data, however, came in below expectations. However, I think that's helped fuel this rebound in bean oil prices as stocks here grew less than expected. We're also seeing some expansion in renewable diesel capacity, which I think is also helping provide a boost. U.S. plantings here just getting underway. Drought levels across much of the nation are much lower levels than they were a year ago. And in South America, we have seen a little bit of a rebound in basis levels. Harvest in Brazil for soybeans is now really starting to hit the home stretch here, likely reaching 80% this week. So we'll continue to monitor this. Argentine harvest is expected to pick up later this month. We'll also expect to see this pretty wide range of production estimates we're seeing from the USDA and other private estimates. I think you're going to start to see that narrow with next week's USDA WASI report.
Mark, how about a quick update on the spec trade and where they're currently positioned in the markets?
Well, after being healthy sellers in the bean complex now really for several weeks, money managers have started to flip that around a little bit, being net buyers here for the past 3 weeks. They continue to hold sizable shorts in soybeans, a little bit of a short in meal, but they've flipped it around now in bean oil. They're actually long about 1,000 contracts, still short in the corn, still short in the wheat, and long in the livestock. Index funds, they've also continued to add exposure to the ag space now. Their holdings now are up about 20% over the winter lows.
Good morning, Alan. Alan, big question here. What will Fed Chair Powell say when he speaks tomorrow?
Okay, well, we have Fed Chair Powell speaking at 11:10 Central Time at the Stanford Business, Government, and Society Forum. So looking back, it was just last Friday that Powell reiterated that the central bank was in no hurry to cut interest rates and that the latest PCE inflation data was in line with what the Fed wants to see. So I think if there are any surprises, I think they may be on the hawkish side, at least markets right now suggesting that may be the case. Also, it appears that there is less and less of a chance that the Fed will be cutting rates at the May 1st meeting, only a 1% probability, the balance 99% chance of no change. And also, we're seeing a declining tendency or declining probability for the Fed to be cutting at the June 12th meeting. This morning, there was only a 58% chance of a 25 basis point cut. That has increased a little bit to a 63% chance, but only a couple of weeks ago, there was a better than 70% probability. So there's a growing feeling over the last couple of days that the Fed may be even slower to pivot to accommodation. And that would suggest that we'll probably see lower prices across the board for the interest rate futures markets.
And Alan, the gold market, what's your outlook for gold?
So the gold market, in fact, just today advanced to a new record high. And this ironically comes at a time where the Fed is slow to cut rates and interest rates remain very high. So some other factor may be at play. One thing I could point to is the massive central bank buying of gold. And this is not really a public buying. It's the central banks that have been so aggressive in buying gold in recent years. And I think they are ramping it up as of late. So for gold to be higher when interest rates are restrictive, that suggests we'll probably see follow-through gains in the gold market. And I do have the next chart objective at 2375. So I think there's a lot left in the gold market with what we're seeing, how the gold is responding to fundamentals. Of course, the technicals, new highs suggest that there should be some follow-through buying just because of the new highs.
And Alan, last question. Market moving reports this week. What are they?
Okay, first of all, Wednesday, we'll have the March Purchasing Managers Index, guessed at 52.2. The March ISM Services Index at 52.7. And then, of course, Fed Chair Powell probably being the most important event this week. That's all on Wednesday. Thursday, jobless claims guessed at 213,000. And then on Friday, we'll have the employment numbers. Non-farm payrolls guessed at up 200,000. Private payrolls up 170,000. Unemployment rate unchanged at 3.9%. And consumer credit anticipated to be up 20 billion.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.